Hello, Warriors. How's everyone doing? Alexander, how are you? Paul, Hugo? Everyone doing okay? All right. Good morning, Monica. So let's talk a little bit about what happened Friday with the NFP. In the middle, less than the whisper number of a million, came in at 800,000. But pretty poor reaction in the dollar. Okay, so the dollar put in a nice little reversal day. I'm sure Blake talked about it on the week ahead video. So this was the reversal day. We're trying to hold this 92.08. It looks like a 2 drive to me. I think that we get more of a correction. And what led it out of the hole when the dollar started coming off was the commodity currencies, which are following through today. The Aussie, perhaps Aussie gets back to this, 76.5 level or so, 76 before the next decline. I'm not calling this a major bottom, but kind of a bear market rally in Aussie. I still think Aussie trades sub 70 before we get a very important major low. The yen was very significant on Friday, especially for gold traders, right? Lower US dollar yen, higher gold. I'm expecting this yen trade directionally to continue, maybe down towards 108, which says there's more left in gold and silver on the upside. And gold's going to find its test between 1820 and 1840. It's my belief right now that these are going to be shorting opportunities. Same in silver, maybe up around this $27 level up here, caught right in between the two moving averages, the 50 and the 200. Thinking 27.10 or so is going to be a problem. Even though the euro was the weakest recovery, we have a 2 here. And if we could just clear 119, I think 120 to 2070 is possible. But again, I don't believe this is a major low. And as I was saying last week, EG gave some pretty negative signals after trying to turn good last week. Looks like it's headed towards this blue line coming in around 85-ish, 84.90, which will still be a little bit above this low. So it tried to turn again last week and was rebuffed. Everyone see that so far? And something I did do right was I came out of Canada before the NFP. Hello, Sinatra. And to me, this looks pretty classic. I guess it could hold here. Crude is coming off a little bit. But to me, I'm really looking for this area, which would be equality here to be a buyer in USD CAD. And so we had, about a 450 pip rally off the bottom. And if we get 1.618 from here, that's going to be 7. It's going to take it to 128 or so, 129. Ultimate target is up around 130 in USD CAD, which has to mean that, we're close to topping in the crude market, and we're already off. We had some type of spike earlier in the day, and the 4-hour did not confirm. Almost, but did not. On the 4-hour, the 2 close. Maybe we get one more push up in the crude, but I'd sell rips in yen, looking for 108. I don't know if we're going to get one, not today. Maybe we get a turnaround Tuesday, but there you go, it's sitting right on this 200 moving average. Oh, the NOK is looking good too, so okay. But I'm going to be patient and wait for what I think could be, a pretty classic A, B, C, and maybe in C we've had A and we're getting B, and we'll get C down at around the 122, 121.5 level. That's where I would get aggressively long again. Canada, because I did participate in this and got out before the NFP. So high conviction trades are sell rips in the yen if you get it over the next couple days. This is not the kind of day that I would chase euro, but you could give it a try here. Still think that here's where the stops are. I do think euro has a chance. I wouldn't buy it on a day when it's down 23 and cable's up 13. The kind of day you want to fade negative action in the euro would be if it was down 5-10 pips and the euro wasn't up 13 but down 25-30. Okay, so the preferred short for now, because of VG, is still the euro. But I'm looking for this correction that started Friday to possibly continue. It doesn't have to. I mean, this was important. Maybe we are going to blow to new highs here. Also, new record highs in S&Ps. I don't see any divergences, or at least major ones here yet, but we're at that number. One of the other fib numbers, I think, was 43.40 something. And then there's something up at 43.70. And even though it's been an outperformer, NASDAQ does have a non-confirmation here at new highs. Here's your 2-hour. It doesn't turn bad until really classically on a daily till we're back under 14.3. But compared to the S&P, it has a weaker RSI structure. See that? We have a new high in this candle here in the 2-hour, which is easier to show confirmation is not. And the 4-hour, which, was confirming here. This still had too much mo, but now look at it. It's right at the 70 level. So I think we could get a turn in the market in the next, maybe this week, even though it's a short week, but no later than the week after. So keep your eyes out for some kind of turn there. That could accelerate the yen decline. And the reason for all of it is yields are everything. And the action that we've seen recently, it's kind of negative. And look at this confluence at the 120 level on the 10-year. That would be supportive for the US dollar yen idea to continue lower, and some more upside in gold, some more upside in NASDAQ until yields start heading up again. Any questions on my overview coming into this holiday shortened week? Yeah, everyone gets it. US dollar yen sell rips. Okay. Thanks, DJ. All right, good morning, Blake. How are you, buddy?
Good. I'm actually getting ready to leave. So I'll be out of town for a week. First time I'm leaving since COVID outbreak.
Oh yeah, where are you going?
We're going to Oregon. Going to visit
nice.
some friends out there. Yeah. So I'm heading
Hope
out
you
of
don't
town.
have a heat wave up there.
Yeah, they're dealing with a heat wave. They just had a house, which is nice. So I know they have air conditioning because
yeah.
They do. But man, a lot of people out there really have been suffering. Portland was down. It was like 115. That's like the weather that we get. So it's crazy, yeah. But I'm excited. And you guys know, for those of you that are longtime listeners, when Blake goes out of town.
Oh, then the S&Ps do top this
There's
week.
a risk of some higher volatility this week with me going to be out of town. But let me just say that there's a few big things that are happening this week. So let me go ahead and take over here. Okay, so let me start off by saying that that we have some pretty big news as a company later on this week. I'll be obviously around. I'm not going to be. I'll be like I'll be popping in the chat room a little bit here and there, and you know, it's just we're with friends that are very active, so we'll be out and about and a lot of, you know, out in the nature, but we have a lot of news happening as a company this week, so really exciting stuff. Also, what else did I want to mention? It is a shortened week, so it's going to be kind of a busy week, especially with the FOMC meeting minutes. But man, we've already seen a lot of volatility, you know, hit, and I'm gonna say that when I go out of town, a lot of times historically there are pretty big moves. I know we've been in a very low volatility environment, and but for those people that have been around me for like the last 20 years, a lot of times when I go on vacation, the markets move, and they move pretty aggressively. So let's see if that will be the case now. And it hasn't been
for longer than a week then.
Yeah, that's what usually people say. People are like, well, why don't you just stay out of town? So no, it's but there might be some volatility this week, and I want to caution you guys for really quick, if you are all like chasing the Aussie higher. I know that there's been some news over the weekend with the Aussie and the Kiwi and whatnot, but I'm, you know, a lot of people are anticipating the RBNZ is going to start raising rates. The RBA started to taper, so everybody's, you know, a little excited about that. I was actually surprised how the RBA reacted. I didn't think they were gonna do this, but anyway, I think the Aussie's up against some pretty key resistance here. But more importantly, when you look around and you start looking around where equities are at, and you look around where, don't forget where DSI is at. This is like a perfect setup and a perfect storm for Aussie traders and Kiwi traders right now. We have the DSIs on Friday were at 91 for S&Ps and NASDAQ, right? When you've got that extreme of a daily sentiment index, you are at risk of actually a reversal. And you got everybody squeezed out of the Aussie today. I got stopped out. I had my stops at break even. I got stopped out over the weekend or overnight, excuse me. But you know, whatever. I wouldn't mind reestablishing some Aussie shorts up here, because these are the types of days where it squeezes everybody out. Then you start to see a reversal in risk, and the Aussie has moved all the way up to this, you know, this 88% retracement. I think while it's below 76 cents, the risk is that we move lower. And I also want to point out, for those of you that are trading crude oil, okay, look at where crude's at. And I'm going to take you to a weekly chart. This has been our previous support, okay? Resistance from 2018, we're right up at the top of this resistance zone. We completed the triangle extension to a T, and we're reversing following a lot of these OPEC headlines. And if you look around, look at what's happening with US dollar, Norwegian krona. I know the euro is weak, I know that, but look at the Canadian. Okay, if crude starts to reverse, the dollar Canadian and the dollar Norwegian krona are going to be some great longs up here. You know, great longs, you know, as we look for bigger breakouts. And if you look at the euro, and I know, Dale, you were just talking about this, look, the euro's at risk. I think the euro's trading heavy. I don't know if you saw the German ZEW numbers overnight. People in my chat room, since I was asleep anyway, people were saying that the move started, really the dollar move started, the dollar move started before like the ZEW numbers came out. And I was looking at the charts and I'm like, yeah, I guess it did. I guess that move, it looked like we got a little bit of a dollar squeeze, and you can see it across the board, right? Here's the cable looking like it was going to break out. Then here's the Aussie, you know, it's probably post RBA. And then the dollar started to reverse, but then the dollar started to pick up some steam, you know, following the ZEW. And I think it's been trading heavy. And look, you know, if the euro starts to break lower, it's going to drag the rest of the dollar pairs with it. And you're starting to see that move really pick up steam in dollar Canadian, dollar Norway, there's a lot, just the dollar is really starting to pick up across the board. So, and I do think that crude looks very toppy at these levels. And the great news is we have Chi Girl coming in today. She's going to be talking, I'm sure she's going to talk a lot of crude. And man, I'm so excited for crude to start to show a reversal, because if it does, it's really going to play into, this US dollar Norwegian krona higher, US dollar Canadian higher. US dollar Norway, by the way, keeps challenging the 200-day moving average. A break above 870, we're going to be trading up towards 9. And you sprinkle in a little bit of risk aversion, and you're going to get a real big move higher in the US dollar Norwegian krona. I know Steve likes to, he's been trading this thing on the short side, or had been for a while. I think he closed out his shorts, but this is one of those that really is hot on my radar. I'm already long US dollar Norwegian krona. I'm just ready to add aggressively to my long. So, Steve, Stelios, good morning, guys.
Good morning, everybody.
Hey, how was the extended weekend for you guys?
It was very nice. Yep. Not too shabby.
No complaints.
Nice and warm.
Yeah. So John said, so the call is US dollar strength. I think US dollar strength is coming. Yes. I think the dollar is really going to start to strengthen here. So what are you guys thinking? What's going on?
Well, for me, we are getting a little bit more of what Canada started. So we had the RBA, who are the market expected it. They're tapering by a little bit. The RB and Z are telling us that they're going to be hiking by the end of this year, and suddenly, there are more and more central banks who are talking the hawkish talk. So this is something we need to be aware of. And oddly enough, 10-year US is still at well below 150, which is very surprising, I have to say. But and the bonds also are quite resilient. But we're seeing inflation. We're seeing oil stubbornly high. Remember, OPEC met. They didn't actually manage to agree on something. So oil is going higher. It's it's lower today, but it's gone higher over the last few days. And when you have a prolonged periods of high oil prices, it will always translate into inflation in goods and services. I mean, everything is interconnected. So, everything points to tighter monetary policy, albeit slowly, yes, and not every central bank is following suit yet. But with inflation creeping higher the way it is, and it not being as transitory as they would like it to be, I don't see how rates and yields can stay low. I really don't. So, what will it be? Will the Fed or the ECB or whoever else, when they start tightening in terms of tapering bond purchases, or also hiking rates, well, we're going to see a reaction from stocks lower. The question is, what do they do then?
I mean, although as you pointed out, Stelios, every central bank is starting to taper. I mean, we're going to expect hawkish FOMC minutes.
Although, guys, you need to put everything in context, as I've said before. Just to give you an extreme example, but it is an extreme example of what can happen, and is happening globally. Do you know what's the central bank interest rate in Argentina as we speak? 38%.
Something big, double digits.
38%.
Okay.
Do you know what's the expected inflation for this year?
What?
48. So, okay. Amazing interest rate. So, what would you do with it? You lose 10% of your purchasing power by the end of the year. And assuming that the 48 expected inflation is going to be real.
So
what are you saying? That could happen here?
Yeah.
I'm not expecting 48% inflation in the US, but again, let's say they eventually hike rates to 1%, 1.5%, and you have a 4 or 5% inflation. So,
yeah, still a negative rate.
Still hugely negative, right?
Mm-hmm.
That's the only thing that matters.
Okay, but look, okay, I understand what you're saying, Steve, but let's talk like central banks now, and how's that going to move currencies now? I mean, I understand what you're saying. But if central banks are becoming more and more hawkish, how is that going to affect the markets? I think that equities are going to start to struggle at these levels. You're probably going to start to see some volatility in currencies, right?
Yeah, I think equities and bonds are going to go down together, and they have to.
Right.
The way
So
Yes,
they've
there's
been-
definitely going to be an initial reaction, because when you see a shift in policy, the markets will immediately go into the defensive. There's no question about it. Now,
What's that? A Peter shift?
if the markets though realize that the reaction is going to be extremely tepid and a fraction of what it should be in comparison, for example, to inflationary pressures, then they're going to go complacent soon afterwards. That's my point. But yes, I don't disagree, Blake. A shift in policy is definitely going to be met with, defensive stance from the markets. That's
Yes,
yeah,
and-
you bet. And that's where I think that the dollar is going to start to outperform here. And that's why, I think you have to be really, really careful for those of you that are shorting the dollar here. And maybe the dollar is probably a decent short against certain currencies. But yeah, you look at the euro. I mean, the euro just really acts very poorly. And I think a move below 118, and we're gonna actually see some broader based dollar moves down towards these lows that we saw back in late 2020. And I think the dollar could really strengthen here. And going back to like longer term, this is like the euro longer term. I mean, we can't ignore that we've broken some major multi-year trend lines. Look, I could see the euro actually trading back down to 113 before it bounces, and I want to get long a lot of euro down here, down in the teens. Like if this is you're talking 2020 2021 right over here. I mean, I really look at the euro as being, if I can have an opportunity to be a buyer, at the 618, maybe 113. Oh my God, yeah. That's going to be, like, in my opinion, the buy of the century in the euro.
And one thing I want to point out is I think the market's going to realize that the ECB is probably going to be the last one to go down the tapering / hiking route,
right?
At least compared to the Fed and the other big central banks.
Yes, Elliott, another point here though, comparative inflation between the two continents is hugely different.
That's what I was going to say. I was going to say
1.9%
inflation in the Eurozone and 3-4% whatever they're reporting in the US. So there's reason for them to wait. So I think I agree, Blake. If we do get a nice little dollar push and euro dollar back down to 113.14, man, that would be an amazing buy.
Yeah, that would be indeed an amazing buy. I'm not sure we're going to see the euro trading that low, but in the short term, Blake, I'm 100% with you. I'm also looking for one more leg higher in the dollar. Now, I'm not sure it will manage to extend that much, but if it does, sure, count me in. I'm buying euros as well.
So Hannah said, hey, as far as Elliott waves go, this is Gregor Horvat, and he said he does see some support down here at 117, and this would be the this wave. Well, I guess that would be wave 3 completing, right?
His main count is that is going to be the completion of C, which means the completion of the whole corrective move lower. Of course, there's always an alternative scenario that can point to an extension lower before the move is over. But in any case, both his, let's say, two main scenarios are that this is a corrective move unfolding to the downside, not an impulsive one.
Yeah, and actually, I bet you sometime this week, especially with me not around the rest of the week,
he's going to be around. Yeah,
I bet he's going to pop in and give you guys some analysis on how he feels about the market. So now we are heading into this week with the FOMC meeting minutes. You guys have any thoughts about what the FOMC is going to, I mean, remember we have the meeting minutes. It's not the actual meeting, so, I know a lot of people tend to, forget that that's just the meeting minutes. But do you think we're going to get some more hawkish chatter because, the Fed's actually talking about tapering, thinking about talking about tapering?
Well, we're going to get some clarification. Yeah, we're going to get some clarification because Powell did say, "Oh, this is the time when we're thinking about talking about tapering, whatever." So we're going to get something. The risk is probably for something maybe a little bit more hawkish than the markets expect. I don't know. It's a tough call.
I agree 100% with you, Stelio. I think that if there is something coming out of it, if that's a big if, right?
Yeah.
There's a higher chance that there's going to be some chit chat in the minutes that is going to point to, I can't even say the word, but let's say, more hawkish direction, although that's not hawkish, but whatever.
Yeah, all right. Well, it should be interesting. Now, what's gold and silver going to do with a more hawkish FOMC? Do you think we're going to get a response there? Oh, and by the way, Bitcoin had a pretty big rejection over the holiday weekend. I should pull that up really quick, and then we'll go over to gold and silver. But Bitcoin really, struggled as we were getting up towards that 35,000 level. But yeah, you look at precious metals continue to bounce here. Gold's back above 1,800. So what do you think gold's going to do if we do have a little bit more hawkish?
Well, what does it do every time? It overreacts, and it's always overreacts to the downside. So it's going to get smacked. The question is, what does the market do then? What does the market think further down the road? What's going to happen? How to what extent will the Fed taper or hike or do whatever they do, and what happens after that? Because I think we all know that in the end, more QE is coming and more, low rates are coming, and it's going to be this all supports risk assets and metals and everything. So the question is, how big a drop? If I knew that, I'd be a billionaire. But I think the initial reaction is for metals to go lower. For more hawkish, there's no question about that.
All right. One of the other points I wanted to make here is if you were watching last week and you saw the dollar had a bearish engulfing pattern, right? Candle, excuse me. And don't forget, we had a bearish engulfing. We did reverse and we did trade lower. All right. But we've already hit the 618 retracement. You can see from the low over here. Here's the high. So I'll actually go into a 4-hour chart, just make sure everybody sees this. This is the low. There's the high. We had a bearish engulfing. The dollar actually traded all the way down to the 618 retracement and has bounced. And it really respected it and bounced pretty aggressively from it. So
plus this looks like another pennant or flag or some kind of a bullish pullback.
Yeah, sure. I mean, this could, as Steve was just saying, here, let me grab the drawing tool. This could be another flag, pennant, whatever, that looks pretty bullish. So yeah, move above 92.50, and hell, we might be chasing, the dollar higher up into resistance here. So just, keep that in mind. The dollar's done. It had a bearish engulfing on Friday. It's already made its move, and it's already bouncing back. So if you guys blinked, you missed it, type of move, at least for now. But we'll see what happens. It is Tuesday and the markets are pretty active. And remember, we have some very, very strong and over bullish sentiment running through the markets right now. So they're starting to build some risks of a reversal. All right. Well, Steve Stelios, thanks for your comments, guys. I'm gonna reiterate something to you. Remember, we have some pretty big announcements coming from. Even though I'm gonna be out of town, I'll still be, within touch. We have some pretty big news happening with ForexAnalytix this week. So make sure you're, following us on Twitter. Make sure you're hanging out during these webinars every day. Some pretty big news happening by the end of the week. So, if you haven't tried out ForexAnalytix, this is the time that you really want to be trying it, because we will have a special pricing over the course of the next couple of weeks, and you won't be able to take a trial because we're going to be giving you guys a really, substantial discount. So if you want to try out ForexAnalytix, jump in our chat rooms. Here's here's what our chat rooms look like right now. This is from I'll show you from the time that I got up this morning, and it was pretty slow. You can just go back and see everything that we've been, talking about. You can kind of jump in and be active. It's still going and going and going. Anyway,
don't isolate, collaborate.
Yeah, be in our chat room, see what we're all talking about. Get involved, involved with other traders that are in the community that are, have similar lifestyles to you, and we'll see you in there. So I'm gonna let you take over, Dale. Have a great.
Hey, Blake,
interview.
we're gonna miss you, mate.
Oh
No, we're not.
Yeah, have a great time, Blake.
Thanks. We'll have a lot of fun. I'll be in the chat rooms just from time to time.
I'm sure you'll be sending a dozen pictures a day.
I will. We're gonna do a lot of outdoor activities, a lot of lakes and rivers and paddle boarding and all the fun stuff. And
now I'm jealous.
Yeah,
thank you.
Hey, you get to go on the GNC whenever you want.
Yeah, but I'm not there yet, right?
Yeah, right. See you guys.
All right,
bye,
Blake.
mate.
Thanks.
Thanks, Blake.
Hi, Tracy.
Hello.
Welcome back. Welcome
Hi,
back,
Tracy.
Trace.
Hey guys.
Hey,
How have
Trace,
you been?
I want to ask you something. Go ahead. Say hello to the Steves. I wanted to ask you how long you and I have been doing interviews together.
Oh my God, I don't even know, like years, right?
Yes. Yeah. So, you know what? It's been such a long time. Before we get to the markets, I was wondering if you could refresh my memory and, tell us a little bit about how you got into the business, because, you've gotten from point A to point B, and, your recognition for being a great analyst with commodities, and particular oil. What was your first gig in the business, and what motivated you? How did it happen? If you want to go back in time with me for just a few minutes.
My actual first job in the industry was literally at a boiler room.
Okay, I thought I remembered that.
Like
okay.
calling 400 people a day, right? Asking them
Yeah.
for money to trade options on futures.
Okay.
So literally that was my first job, and I kind of just worked my way up from there. I was in managed futures. I worked on the trade floor and managed a trade desk there. Then I worked at a prop firm. Then I went out on my own. And now I work for a family office.
Okay.
Great
story.
As well as a hedge fund telemetry, where I do analysis for energy and materials.
Okay, and there that is. Okay, so let me ask you, when you're at the boiler room and you're working and cold calling, what was it for? Makata options?
So it was just options on
Futures?
on futures. So any market that they would want to trade.
Right.
Right.
Okay.
And we're just basically asking for money. So, to gamble.
To convert their dollars to commission dollars.
Right.
Okay, I know. I've been there. So all right.
That was like back in the day when it was like $70 a round turn.
Oh, I remember that. Yeah, when you could make a living as a broker. Yeah.
Right.
Okay. Now it's what? Full service for free?
Exactly. Right.
All right. All right. So trades, here we are. I think we, achieved some of the numbers you talked about many months ago. Relentless move in crude. What's your take on what's happening now? Are you expecting some type of pullback? Is OPEC more cooperative when prices are low and less cooperative when prices are high?
I disagree. I think, and I kind of talked about this last time. We have seen a total change in this alliance, right? And we've seen their strategy of, not cheating anymore, and forming a more cohesive group has paid off, and it's paid off in spades. So they're
Yes.
producing less, but they're making more. And I think this year, you know, has proved that, even to the shale producers. So, you know, I don't think, and I've been saying this for a year now, that really this is a very different group than what we saw last
Decade.
February and March of 2020, when, you know, everything
Oh, okay.
went,
When everything
went
cratered.
south.
Yeah,
And everything went south when they called off the deal and started, you know, producing as much as they could. So I think lessons have been learned. So really what I think is, I mean, we're starting to get a little bit stretched on crude at this point. You know, I think we got an initial, you know, kick yesterday. Well, you know, that there was, the volume was so thin anyway, but because they didn't come to an agreement, which means they're going to continue with their current agreement instead of increasing. That said, I do think they will come to an agreement with UAE. I think what probably will be most likely is they'll do the 400K barrels per day, August through December, and that will be 2 million total. And I think what they wanted to do is they wanted to stretch the deal out from April 22 to December 22. I think they'll probably take that off the table, and that's the agreement they'll probably come to, even though it seems like it's taking a very long time. And I do think that they will come to an agreement before the end of this month, because the new cuts would start in August, right? They already have a program set for July. And so I think as soon as they come to a decision and the market knows that there's more oil coming on the market, then we're likely to see a pullback at that point.
Okay, I think you were tweeting about a long-term trend line that WT broke out of. I can't take it back to the 140 level, but this is kind of, well, you can't see my screen because you're on the phone, but
I can see it.
Oh, okay. So is this kind of what you were talking about? This is a major monthly breakout in
so
crude?
It's a breakout. Yeah, so I wouldn't be surprised if, you know, we went back and retested that breakout. Right?
Okay.
Like I think
upper 50s.
So no, I don't think we'll see upper 50s. I think we're going to probably maintain, because the market's actually very tight right now. And even with 400K barrels per day, unless we see lockdowns again, which I don't foresee, you know, I think, you know, this market, I think if we get a pullback in this market, we're likely to move kind of range bound for a while. I mean, it's made a huge move, so it wouldn't shock me to kind of see us move sideways, you know, in that like $65 to $75 range. And also we have to look at right now, what else is also pushing up WTI right now. The spreads are blowing out, which means somebody thinks that we're going to see real supply issues at Cushing in the near term, right? So for August and September.
So there's backwardation in the market right now?
Huge. I mean, if you look at the spreads there, the front months are blowing out. So it's
that's a bull market. Yeah.
Backwardated. I mean, DC spread is $7 wide right now.
Wow.
Yeah, so it's huge. So somebody's betting that we're going to have some real supply issues. So I definitely don't see a huge pullback.
Sounds like the Middle East to me.
Soon.
Maybe there are any geo risks that you see to everything we're talking about?
You know, I think, well, I mean, WTI would be specifically what's happening at Cushing. The thing that is happening is Saudi Arabia just raised prices to the US for August. So, which it decentivizes the US to buy, right? And you'll use local instead. So somebody could have known that, or but so we're going to end up using more of our supply and probably importing less from Saudi Arabia because they're raising prices on us, in other words.
Do we have enough supply to go to without dipping into the strategic oil reserve?
Yeah, well, I mean, I think that we'll be fine, depending on, how we're exporting a lot right now too. right? So
Okay.
we've just had the highest exports since last January 2020. We just started, the last report just had the highest exports since January of 2020. So so we're exporting a lot too. So there is real actual physical tightness in the market right now.
Okay, so maybe to accomplish less buying with Saudi Arabia, we export less?
That could, that probably, would be something that they would start looking at. I mean, we still have some strategic releases right now going on, because when oil cratered back in April, in May and June, they allowed oil companies to store oil in the strategic reserve to get it off the market. So there are releases all this summer from back when they were storing it last year.
Okay. So you also cover natural gas, right, Trace? Not as much. But,
not as much, but yes.
Okay, because there are a lot of technicians pounding the table about a breakout in natural gas. I mean, it's had a nice little move. What are you thinking here?
I mean, I think actually there's a lot of upside for U.S. nat gas, being that European natural gas and Asian natural gas.
$14?
And and it's over 20 in Asia. So right now, even with the cost of transportation, it's much cheaper to import from the US, and we're starting to import from the US, and we're starting to export a lot. So I definitely think there's room to the upside, especially because fundamentally, I think we're going to see natural gas used as a transition between renewables and oil.
Right.
Because it's a cleaner fuel. So I think we're going to see a lot more demand coming from, Africa, Europe, Asia, South America. So, again, and, our U.S. nat gas is definitely lagging compared to its counterparts.
Oh, yeah. I mean, the arbitrage, Europe, our prices compared to Europe is like $10 spread or so. You can make a fortune on it, right?
Right.
Okay. I know you're also a follower of the dollar, and we've had, from when Paul came on, the last Fed meeting, we've had a bit of a bounce here, short-lived bounce in the dollar, or does this correction have more legs?
I don't know. I mean, I don't know how high the Fed is going to let the dollar get exactly. From a purely technical point, that kind of looks like a double bottom, right?
Yeah.
So I definitely could see, us move a little bit higher. I don't know. I don't think they'll let it get much above, 95, if it even gets that high. This is my personal opinion.
So the Fed doesn't want a stronger dollar. Is that what I interpret from your first statement? Okay. Yeah. Because that's deflationary. A weaker dollar would build momentum for what they want to happen in inflation, which is already happening, right?
Exactly. So again, I don't think they're gonna, I don't think we're gonna get a huge breakout
in the dollar. So you're not as intermediate term. You were always pretty bullish a dollar. It sounds like that's been tempered with the decline that we've had.
It is, but that's, that also has a lot to do with, the change in Fed policy. So, you gotta change with the changing environment.
Yeah. Well, my favorite is W.D. Gant's quote of, if you don't learn how to change your mind, you won't have any change left. So
that's perfect.
That's a classic one. So then with what you're talking about in the dollar, that, it's just a bear market rally, are you looking to buy the precious metals on this pullback? We had a little pullback, and we're up today with weaker US dollar yen. Still constructive on the gold market, Trace?
Yeah, yes, I am constructive on the gold market, even though we've had some kind of pullbacks. How I'm actually playing the gold market is through gold miners, however.
Okay.
So I'm long gold miners right now.
The basket or individual, like here's GDX?
Yeah, I have individual.
Okay, Newmont, best of breed. but you probably have some small ones too.
I have some small ones.
Want to
Yeah,
throw a name out? I'd be interested in what you like in the mining section. You want to share it?
GFI. I'll give you my secret one. GFI.
Oh wow! Everybody's we're getting the secret.
So I'm gonna give you my secret one.
Okay, here it is. There's GFI. Everybody, Tracy's favorite gold miner. Okay.
So that's kind of the way that I'm playing the gold market this time instead of actual, because it's been so volatile, right?
Yeah.
It's kind of been a bit difficult to trade. So instead I'm playing miners. And there's also a reason for I'm playing miners is because just like oil, there's not enough capex in the industry.
Oh yeah, it takes forever to open a new gold mine or copper mine, even longer than to uncap a well.
Right.
Right. Okay.
Exactly.
So that probably means constructive copper. Anything that if you drop it, it hurts if it falls on your foot.
Right.
Right. Anything within, as Steve Volge would say, anything with intrinsic value. So I'm wondering here with your take on the gold and your take on the dollar, is there anything that you could say about what's happening with the blow off in NASDAQ and the blow off in S&Ps? I'm sure people still ask you, what do you tell them to do if they, for example, they had a new cash to deploy? You tell them just to wait and not go into the market now, or what?
I mean, I think it's all a personal thing. I think, you know, sort of, I think if we start seeing, you know, I mean, I'm a bull this market, right? But that doesn't mean that we're not going to see pullbacks. I mean, if you look, you know, over 100 years, the market's gone, I mean, from left to right. So, so I'm definitely bullish this market, but if you know, I think probably the way to play it would be to buy some protection, right? Buy some downside protection.
Yeah, people feel that's a waste of money now.
I know, because the market keeps going up, but you know, I think that, you know, I don't know, you know, we have to, you know, I think the summer, we might just have a summer melt up, right? Because lower volumes, it's a quieter market, and things of that nature. But when we come to the fall, you know, I think, you know, like last September, we kind of had a pretty nice correction. You know, I wouldn't discount that happening again.
Okay, so I think we've covered most of the market. Oh, I know. One of your quotes is, "It's all about yields." Okay, you talk about that a lot. So here's a 10-year trace on the daily. To me, it now looks like we're probably headed down towards 120 or so. Do you think lower yields before higher, or could we just start heading up from here? What's your take on yields?
You know, I mean, I think we could see a little bit lower before higher again. You know, again, it's all up to the Fed.
It's a tough call.
It's a tough call on this one. I gotta be honest. So
yeah, that's it.
You know, if you have, you know, it depends what the Fed says, really. Are they going to be hawkish? Are they not going to be hawkish? You know, I'm not really sure. I can't see them doing anything this year for certain. But,
well, this is what the Fed said, right? This was the Fed. So you could have faded the Fed for a few days. So this was Powell. And then within a day, it gave it all back and actually spiked down here. So it's not even what the Fed says anymore. It's like it has a mind of its own. But anyway, it looks like we're going to get, you know, from where we came from, when you look at this, Trace, you know, this huge move, that this would just be a normal correction before we headed higher, right?
Right.
Okay. Any comment on cryptos or not?
I have to say I'm not.
Okay.
I'm not a crypto person. Sorry, guys.
Okay. Yeah. I don't understand it either. Okay, well, Trace, I know you have a busy day going here. Anything else that you want to cover before we say goodbye? I do want to let our viewers know this is where Tracy writes and contributes.
Yeah,
This
you
is
can
her
sign up
website.
for a 2-week free trial if you want. If you're interested in materials and energy, it's mostly there are some futures calls, trades in there, but they are mostly equity calls.
Nice testimonials, and everyone knows Tracy made flip. She changed her mind to being bullish from being a bear to a bull. I don't know.
For the first time
430.
since 2007.
Yeah, see, so that was a big adjustment for you because you get stuck in a paradigm where it's sometimes, especially when a market's been kind of bearish, you made money selling rallies all these years, to turn it around is a pro move. And we all have a lot of respect for you, Tracy, and your work, and want to thank you for coming in today. And I hope that your new home is filled with happiness and joy, and pips just rain down from your ceiling in your new house.
Well, thank you.
All right, Tracy.
And thanks for having me. Have a great day, everyone.
All right, I'll be in touch with you, Tracy. Everyone at Shy Girl, you could follow her or take a trial. I did. Very good stuff. So take a trial. You could see. Don't write down my email address. And thank you again for your giving spirit and hanging out with us today, Tracy.
Yeah, absolutely. Thank you.
And everyone else, remember, don't just count your oil barrels or your Krugerrands, count your blessings. And we'll see everyone for Turnaround Wednesday, since today is really like Monday. And that's a wrap, everyone. Good hunting. You could join the team in about 25 minutes for the morning edge. Adios. Thanks, Trace.
Thanks.